Want to learn the essential life and health insurance topics quickly? This slides guide is packed with high-priority points to help you study smarter, not longer. Today we're reviewing medical expense insurance, which is one of the most fundamental topics in health insurance. Medical expense insurance helps pay for the costs associated with accidents and illnesses, including hospital care, surgery, doctor visits, labs, drugs, and nursing. Most individual plans last 1 year, and care received at government facilities is often excluded. One way to understand this coverage is to ask yourself, if I had a hospital stay tomorrow, who would pay for it? For example, if you break your arm, medical expense insurance helps pay for the ER visit, X-rays, and the doctor's fees. Next, let's compare basic versus major medical insurance, which is extremely important for exams. Basic medical expense is first dollar coverage, there's no deductible, but benefits are limited. It generally includes hospital, surgical, and physician expense categories. Major medical has much higher benefit limits, includes deductibles and co-insurance, and is designed for catastrophic or long-term illness. A simple comparison, a basic plan might pay the first $200 of a hospital charge. If the actual cost is $400, you pay the other $200. A major medical plan may require a deductible and an 80/20 co-insurance split, but it covers far larger bills. Within basic medical, the hospital expense benefit pays for room and board, labs, X-rays, and medications. There is no deductible, but the benefits are limited and often based on a daily maximum. For exams, remember UCR, usual, customary, and reasonable, which means the insurer pays what's typical for that area. If the insurance pays $200 per day but the hospital charges $400, you pay the extra $200. Surgical expense coverage pays for the surgeon, the anesthesiologist, and the operating room. Payment can be based on a surgical schedule, UCR, or relative value units. For example, if an appendectomy is scheduled at $1,000 but the surgeon charges $1,500, the insurer pays $1,000 and the patient pays the remaining $500. Physician expense coverage pays for non-surgical doctor visits with limited benefits and time caps. Other basic benefits may include private duty nursing, convalescent care, emergency accident care, mental health treatment, and maternity benefits if purchased. A good question to keep in mind is, are routine doctor visits fully covered? Usually, the answer is no, coverage is limited. Moving to major medical, this coverage offers very broad protection. It includes inpatient and outpatient services, surgery, physician care, labs, drugs, and catastrophic protection with high maximum benefits. It has deductibles, co-insurance, and a stop-loss limit, which caps the insured's out-of-pocket costs. Hospice care is usually covered, including pain management, home care, and counseling. There are two types of major medical, supplemental and comprehensive. Supplemental major medical kicks in after a basic plan pays, covering the remaining costs subject to deductible and co-insurance. Comprehensive major medical combines both basic and major coverage in one policy with a deductible, co-insurance, and high maximum benefits. Next, let's look at deductibles, which are highly testable. Deductible types include flat, corridor, integrated, per cause, all cause, calendar year, and carryover deductibles. For example, with a $1,000 calendar year deductible, if you spend $600 in November and $500 in December, the first $600 counts this year and $400 carries over to next year. Family deductibles include two important exam concepts. A common accident deductible, where one deductible applies if family members are injured in the same accident, and a family maximum deductible, which treats all family members as having met their deductible once the family cap is reached. Co-insurance is the cost-sharing amount after the deductible is met, commonly 80/20. The stop-loss or out-of-pocket maximum means once the insured has paid that amount, the insurer pays 100% for the rest of the year. For example, if the stop-loss is $5,000 and you've already paid that amount, the insurer takes over completely. Next are pre-existing conditions and internal limits. Pre-existing conditions may have waiting periods and may not be covered immediately. This applies even if the applicant disclosed the condition. Replacement policies can also delay coverage. This is a common exam question. Internal limits include restrictions like semi-private rooms only or lifetime caps on certain treatments. A major exam topic is the Health Savings Account, HSA. To qualify, you must have a high deductible health plan, HDHP. Contributions are tax deductible, growth is tax deferred, and withdrawals for medical expenses are tax-free. However, non-qualified withdrawals come with taxes plus a 20% penalty. For example, if you withdraw $1,000 for a vacation, you'll owe tax plus a $200 penalty. Next are the differences between HRA, MSA, and FSA. An HRA is funded by the employer only and reimburses medical expenses tax-free with rollover allowed. An MSA is for the self-employed or small employers and provides tax-free savings for medical costs. An FSA lets employees set aside pre-tax money but is subject to the use it or lose it rule, with only limited rollover allowed. For example, if you put $2,000 into an FSA but only use $1,000, the remaining $1,000 is forfeited. Finally, here are the top 10 must-know exam points. Basic plans have no deductible and low limits, major medical has deductibles, coinsurance, and high limits, UCR is essential. Know the differences between surgical schedule, UCR, and relative value methods, understand all deductible types. Remember that stop-loss means the insurer pays 100% afterward. Pre-existing conditions have limitations. HSAs require HDHPs. HRAs are employer-funded, and FSAs follow the use it or lose it rule.